Welcome back to Bonis Life, your premier destination for cutting-edge cryptocurrency analysis. I'm Boni, and today we're diving deep into the past 24 hours of market action, a period that's been nothing short of fascinating, following Moody's historic downgrade of the United States credit rating. If you're looking for surface-level analysis, you might want to click away now. But if you're after the advanced insights that give you a genuine edge in this market, insights you simply won't find elsewhere, then you're in exactly the right place. In the next 30 minutes, we'll dissect what really moved the markets, why assets performed the way they did, and most importantly, what's likely to happen in the next 24 hours. We'll cover technical patterns, on-chain metrics, institutional movements, and the global economic factors that are shaping this market in real time. So whether you're a seasoned trader or just beginning your crypto journey, grab your notebook. This is the analysis you can't afford to miss. Let's get started. Before we dive into individual assets, let's take a moment to understand the broader market context. The total cryptocurrency market capitalization currently stands at $3.43 trillion, showing a modest 0.8% increase over the past 24 hours. A remarkable recovery considering the significant macro event we've just witnessed. The big story, of course, is Moody's downgrade of the US sovereign credit rating from I to A1. This is only the second time in history that the United States has lost its top-tier credit rating, with the first being S&P's downgrade back in 2011. The immediate reaction was predictable, a risk-off sentiment that sent both traditional and crypto markets tumbling. What's fascinating, however, is the speed and strength of crypto's recovery. While traditional markets remain cautious, Bitcoin has already reclaimed the $104,000 level, demonstrating remarkable resilience. This divergence is telling us something important about the evolving narrative around cryptocurrency as a hedge against traditional financial system concerns. Trading volume over the past 24 hours has been robust at $76.86 billion. Indicating healthy market engagement despite weekend conditions. Bitcoin dominance remains strong at 60.3%, while Ethereum holds steady at 8.85% of the total market. Now, let's look at what's happening beneath the surface. The initial shock of the Moody's announcement triggered approximately $730 million in liquidations, with about 73% of those being long positions. However, liquidation volumes have since normalized, suggesting the market has absorbed the news and found a new equilibrium. What's particularly noteworthy is the regional response. North American traders initially led the selling, but Asian markets showed remarkable buying pressure during their trading hours, effectively creating a floor for prices. European traders have taken a more measured approach, selectively accumulating quality assets at discounted prices. This regional dynamic is crucial to understand as we look ahead to the next 24 hours of trading. But before we make those projections, let's analyze the technical and fundamental factors driving the top cryptocurrencies. Bitcoin, the market leader, is currently trading at $104,107, up 1.2% over the past 24 hours. What's remarkable here isn't just the price action, but the market structure that's forming. Looking at the technical picture, Bitcoin is showing strong development within a rising trend channel in the medium term. After the initial drop following Moody's announcement, which saw prices briefly touch $62,500, we've witnessed a classic V-shaped recovery, a pattern that historically signals strong buyer conviction. The hourly chart reveals something particularly interesting, a tight consolidation pattern, with the bid-ask spread narrowing to just 0.05%. This compression typically precedes a significant move, and all indicators suggest the path of least resistance is to the upside. Key support levels to watch are $101,500 and $98,700, which coincides with the 50-day moving average. Resistance sits at $105,000, a psychological round number, and $108,500, which marks the recent high. The RSI is currently at 58, indicating momentum without being overbought, while the MACD is forming a positive crossover, a classic bullish signal. But the technical picture is only half the story. Fundamentally, Bitcoin's narrative as digital gold and a hedge against traditional financial system concerns has been significantly strengthened by the Moody's downgrade. This isn't just speculation. We're seeing it in the on-chain metrics. Exchange outflows have accelerated in the past 12 hours, suggesting accumulation by long-term holders. Meanwhile, spot ETF inflows have remained consistently positive despite the market volatility, indicating institutional confidence remains unshaken. What's particularly telling is Bitcoin's decreasing correlation with traditional markets following the downgrade. While the S&P 500 has struggled to find direction, Bitcoin has charted its own recovery path. Exactly the kind of decoupling that supports the digital gold narrative. For the next 24 hours, I'm projecting a trading range of $103,500 to $106,800 for Bitcoin. A breakthrough above $105,000 could accelerate momentum toward $108,500, while failure to hold $101,500 might trigger a retest of $98,700. The most probable scenario based on current market structure is a breakout from the consolidation pattern with a target of $106,800. Ethereum, the second largest cryptocurrency, is currently trading at $2,515.70, up 2.0% in the past 24 hours. While this performance is solid, there are some interesting divergences from Bitcoin that warrant attention. Technically, Ethereum is in a consolidation phase after being rejected at $2,650. The chart is forming what appears to be a bull flag pattern, a continuation pattern that typically resolves to the upside. However, unlike Bitcoin, Ethereum is trading above its 50-day moving average but below its 20-day moving average, indicating some relative weakness. Support levels are established at $2,400 and $2,320, while resistance sits at $2,550 and $2,650. The RSI is neutral at 52, and the MACD shows a slight bearish divergence that bears watching. What's particularly interesting is the ETH-BTC ratio, which has been declining, suggesting that capital is favoring Bitcoin in the current market environment. This is typical during periods of macro uncertainty, where Bitcoin's more established narrative as a store of value takes precedence. Fundamentally, Ethereum continues to show strength in its ecosystem metrics. The staking rate has increased to 28.5%, reducing available supply on exchanges. Layer 2 solutions continue to gain traction, with total value locked increasing despite market volatility. For the next 24 hours, I project Ethereum to trade between $2,450 and $2,620. The key level to watch is $2,550. A breakthrough above this could trigger a rally toward $2,620, while failure to hold $2,450 might see a retest of $2,400. The completion of the bull flag pattern would target $2,620. But Ethereum needs to reclaim $2,550 first to confirm this bullish scenario. XRP has been one of the more volatile major cryptocurrencies in the past 24 hours, currently trading at $2.39, up 2.5% for the day. This volatility was triggered by a significant $73 million whale transfer that caught the market's attention. The technical picture shows a V-shaped recovery similar to Bitcoin, but with more pronounced wings. XRP is trading above all major moving averages, with the RSI at a bullish 62 and the MACD showing a fresh bullish crossover. Support levels are established at $2.30 and $2.20, while resistance sits at $2.50 and $3.40, the latter being a potential longer-term target if current momentum continues. There is, however, a concerning development on the XRP-BTC pair, which is forming what technical analysts call a death cross, where the 50-day moving average crosses below the 200-day moving average. This suggests XRP may underperform Bitcoin in the medium term, despite its current dollar-denominated strength. Fundamentally, XRP continues to be driven by speculation around Ripple's potential IPO and expanding use cases in cross-border payments. The regulatory environment has improved significantly, but institutional adoption remains cautious compared to retail interest. For the next 24 hours, I project XRP to trade between $2.30 and $2.65. The key level to watch is $2.50. A breakthrough above this could accelerate the move toward $2.65, while failure to hold $2.30 might see a retest of $2.20. Given the recent whale activity, expect continued volatility in XRP, making it suitable for traders with higher risk tolerance. Let's quickly cover the other major cryptocurrencies in the top 10 by market capitalization. BNB is currently trading at $646.47, up 1.1% in the past 24 hours, but down 1.7% for the week. It's forming a symmetrical triangle pattern with relatively low volume, suggesting indecision. For the next 24 hours, expect BNB to trade between $635 and $670, with a breakout from the triangle targeting $670 if volume confirms. Solana has been a standout performer, trading at $171.67, up 2.9% in the past 24 hours despite the broader market volatility. It's forming a bull flag pattern after a recent rally with strong volume supporting the move. For the next 24 hours, expect SL to trade between $168 and $185, with a breakthrough above $175, potentially accelerating the move toward $185. Dogecoin is showing surprising strength at $0.2246, up 5.2% in the past 24 hours. Though still down 4.2% for the week, it's potentially forming a cup and handle pattern, a bullish continuation signal. For the next 24 hours, expect Doge to trade between $0.215 and $0.245, with a breakthrough above $0.23, potentially triggering a move toward $0.245. Cardano is underperforming at 0.7576, up just 0.5% in the past 24 hours and down 5.4% for the week. It's attempting to form a double bottom pattern, but needs to reclaim 80 cents to confirm a bullish reversal. For the next 24 hours, expect ADA to trade between 73 cents and 82 cents, with the 80 cents level being crucial for bullish confirmation. Tron has been one of the few cryptocurrencies showing positive weekly performance, trading at $0.2723, up 1.0% in the past 24 hours and 3.8% for the week. It's forming an ascending triangle pattern, a bullish continuation signal. For the next 24 hours, expect TRX to trade between 0.265 and 0.285, with a breakthrough above 0.28, potentially accelerating the move towards 0.285. The stable coins USDT and USDC have maintained their pegs admirably despite the market volatility, demonstrating the maturity of the crypto ecosystem in absorbing macro shocks. Now, let's analyze how global events have impacted the crypto market in the past 24 hours and what this means for traders. The Moody's downgrade of the US credit rating is the dominant story, and its implications are profound. The downgrade reflects growing concerns over the US government's ability to manage its debt as borrowing costs rise amid persistent inflation and political gridlock. The immediate market reaction was risk-off across all assets, but crypto's swift recovery tells us something important about the evolving market narrative. Historically, US credit downgrades have eventually been positive for alternative assets, as they highlight the challenges within the traditional financial system. What's particularly interesting is the timing of this downgrade, coming at a weekend when traditional markets have limited ability to respond, but crypto markets remain open. This has created a unique price discovery environment that savvy traders can capitalize on before traditional markets open on Monday. Beyond the Moody's downgrade, other economic indicators have been mixed. Federal Reserve officials have maintained their stance on current interest rates, while inflation data has shown slight cooling in major economies. Employment figures remain stable across G7 nations, providing some fundamental support to the broader financial system. Regional dynamics are also playing a crucial role. Asian markets, particularly those in Singapore, Japan, and South Korea, have shown strong buying interest during their trading hours. This regional rotation of capital is creating distinct trading patterns that align with global time zones, a phenomenon that 24-hour traders can leverage for entry and exit points. Regulatory developments remain supportive, with improving clarity in major jurisdictions contributing to institutional confidence. This regulatory evolution is particularly important for the long-term thesis of cryptocurrency as a legitimate asset class. Based on our comprehensive analysis, let's project what's likely to happen in the crypto market over the next 24 hours. The overall market direction appears cautiously bullish with potential for further recovery. Volatility is expected to be moderate, with potential for weekend spikes, particularly as different regional markets become active. We're seeing an interesting sector rotation, with Layer 1 alternatives like Solana and Tron showing relative strength compared to the broader market. This suggests capital is flowing toward perceived value rather than simply following market beta. The correlation between crypto and traditional markets is likely to decrease further as the implications of the Moody's downgrade continue to be processed. This potential decoupling could accelerate if we see additional statements from financial authorities over the weekend. Volume is projected to follow typical weekend patterns with some reduction, but likely remaining above average given the significance of recent events. The sentiment trajectory should continue shifting from fear to cautious optimism as the market demonstrates resilience. For different investor types, I recommend the following approaches. Conservative investors should focus on Bitcoin and Ethereum with clear stop-loss levels. Bitcoin's support at $101,500 and Ethereum's at $2,450 provide natural risk management points. Moderate risk takers might consider Solana and Tron for momentum plays, given their technical strength and fundamental developments. Entry points near $168 for SOL and $0.265 for TRX offer favorable risk-reward ratios. Those with higher risk appetites could watch XRP and Dogecoin for volatility opportunities, but should be prepared for rapid price swings in both directions. Tight stop losses are essential for these trades. Long-term investors might view this as an accumulation opportunity in quality assets following the initial downgrade reaction, particularly if prices revisit support levels. Key risk factors to monitor include failure of Bitcoin to hold the 101,500 support level, declining volume during price increases, which would suggest weakening momentum, bearish divergences on momentum indicators, particularly on the 4-hour time frame, further credit rating actions or unexpected regulatory announcements, large exchange outages, or security incidents that could disrupt market function. As we wrap up this analysis, let's summarize the key takeaways from the past 24 hours and what they mean for crypto traders and investors. The market has demonstrated remarkable resilience in the face of a significant macro event, the Moody's downgrade of US credit. This resilience speaks to the maturing nature of cryptocurrency as an asset class and potentially signals a strengthening narrative around crypto as a hedge against traditional financial system concerns. Bitcoin continues to lead the market, showing the strongest recovery and maintaining its dominance at 60.3%. Its technical structure suggests further upside potential, with a projected range of $103,500 to $106,800 for the next 24 hours. Ethereum and other major altcoins are following Bitcoin's lead, but with varying degrees of strength. Solana and Tron stand out as relative outperformers, while Cardano continues to lag the broader market. The regional dynamics of this recovery are particularly noteworthy, with Asian markets showing strong buying interest that has helped establish price floors. This regional rotation of capital creates opportunities for traders operating across different time zones. For the next 24 hours, the most probable scenario is continued recovery, with Bitcoin potentially breaking above the $105,000 level if volume confirms. However, traders should remain vigilant for any signs of weakening momentum or further macro developments. If you found value in this analysis, please hit the like button and subscribe to Bonis Life for daily insights that give you a genuine edge in this market. Drop a comment with your own price predictions for the next 24 hours. I'd love to hear your thoughts. Remember, in markets driven by fear and greed, the advantage goes to those with superior information and analysis. That's exactly what we strive to provide here at Bonis Life. Until tomorrow, this is Boni, wishing you profitable trading and intelligent investing. Stay ahead of the curve. Before you go, a quick reminder that this analysis is for educational purposes only and not financial advice. Always do your own research and never risk more than you can afford to lose. If you're new to the channel, check out our previous episodes for more in-depth analysis and trading strategies. And don't forget to hit the notification bell so you never miss our urgent market updates. Thank you for watching Bonis Life, where advanced analysis meets intelligent trading. See you in the next episode.